How many stocks should you actually buy and hold in your portfolio? This is a common question that I think we've all struggled with at times. Everywhere you look online, you hear professionals constantly telling you that you need to diversify. Don't put all your eggs in one basket. If you're invested in different things, then they'll all have a chance to make money for you. You've heard these things before, right? Well, just like everything when it comes to investing, the honest answer is that it depends. So in this video, we're going to break it all down, talk about different scenarios, and listen to what two of the most successful investors to ever live have to say about it. So by the end, you'll have a better idea of what works best for you. And let's start off with a common misconception that I've heard many times in the past. Diversifying your investments helps you build wealth. Wrong. And I'm not sure how this idea even came about because just by its definition, diversification is about reducing risk by spreading it out across multiple places. And anytime you reduce risk, in general, you're reducing returns, which is a totally valid strategy depending on what your goals are. Because while diversification doesn't actually help you build or generate wealth, what it does is help you preserve the wealth that you already have. Which is why diversification makes a lot more sense if you're an investor that's close to or at retirement. At that point, you're probably not too worried about long-term growth and capital gains, but you still have 20 plus years or more to use that money. In that case, diversification makes a lot of sense because it's critical to make sure you preserve what you have. But what if you're not in retirement yet and you want to set up your portfolio to be able to build wealth over the long term? Well, let's listen to what Warren Buffett has to say about it in that particular case. And this is really good, so I'm going to let it run and then we'll break it down afterwards.
We think diversification is, as practiced generally, makes very little sense for anyone that knows what they're doing. Diversification is a protection against ignorance. I mean, if you want to make sure that nothing bad happens to you relative to the market, you own everything. There's nothing wrong with that. I mean, that is a perfectly sound approach for somebody who does not feel they know how to analyze businesses. If you know how to analyze businesses and value businesses, it's crazy to own 50 stocks or 40 stocks or 30 stocks probably, because there aren't that many wonderful businesses that are understandable to a single human being in all likelihood. And to have some super wonderful business and then put money in number 30 or 35 on your list of attractiveness and forego putting more money into number 1 just strikes Charlie and me as madness.
Now, Warren said a lot of interesting things in that clip, so let's hit each one.
Diversification is a protection against ignorance. Makes very little sense for anyone that knows what they're doing.
Now, I've heard this quote misinterpreted a couple different ways, but one way is that people are like, oh, he's talking down to people who diversify. But that's not what he's doing at all. He's just being honest and saying, if you're not comfortable analyzing businesses and putting a significant amount of your money into one, then yeah, diversification is probably better for you. And Warren really hits that home in the next point when he says,
I mean, if you want to make sure that nothing bad happens to you relative to the market, you own everything. There's nothing wrong with that. I mean, that is a perfectly sound approach for somebody who does not feel they know how to analyze businesses.
And I would just add, it's not just for people who don't know how, but also for people who just don't want to spend the time to do it. So to figure out how many stocks we should be buying, the first question we really need to ask ourselves is, should we be buying individual stocks at all? So if you don't want to or aren't prepared to analyze stocks and monitor them, then don't. You can just own the market or indexes or funds that are managed for you, and it can be as simple as a one ETF fund of the S&P 500, or even a target date retirement fund, even though I'm not a huge fan of target date retirement funds, but still, it's an option. Or if you didn't want to own individual stocks, but you want to be able to get specific exposure to certain things, then a 2, 3, or 4 fund combination can work really well. And we've talked about this before in terms of matching a dividend fund with a growth fund or a tech fund to be able to get a return that actually beats the S&P 500. So it can be as simple as something like SCHD with QQQ or with VGT. Or it can be a well-known 3-fund ETF like Vanguard's 3-fund portfolio that includes VTI, which is the total market index, as well as VXUS, which is the total international market index, and then BND, which is the total bond index. But the point is, if you don't feel prepared to do it yourself, that's okay. That's the power of ETFs, indexes, and managed funds. And it doesn't have to be all or nothing either, because I'm actually kind of in the middle myself, to where I obviously have my stock portfolio that you guys see every month, and we also have retirement accounts that I don't really share because all they have is the S&P 500 index in them. So even in my own situation, I'm using indexes to achieve my goals in part of my portfolio so that I can spend the time concentrating on the actively managed individual stocks that I do have. And Buffett talks about this a bit when he says,
it's crazy to own 50 stocks or 40 stocks or 30 stocks probably, because there aren't that many wonderful businesses that are understandable to a single human being in all likelihood.
And this point really hits home with me, and I've actually taken it into practice. Currently, I have about 11 holdings, and I've talked over time about maybe getting to even less. And that's because in order to do this well, analyzing stocks and picking my own individual stocks, I feel like I need to get a certain level of depth and understanding with each company that I've invested in. And to me, that's how you gain the confidence to feel like you understand what you're doing and know what you're looking for. Because if I have 30 stocks, there's no way that I'm going to be able to understand them at more than just a surface level. And that's just for me. Maybe for others, it's not a big deal. But even having 10, 11, maybe 15 seems like a lot, to where over time, I may actually reduce it even more. And then lastly, just to finish up, probably the best part of this quote from Buffett.
And to have some super wonderful business and then put money in number 30 or 35 on your list of attractiveness and forego putting more money into number 1 just strikes Charlie and me as madness.
The funny part about that quote is I just never really thought about it like that. Like, yeah, what is the point of your 30th stock? Like, how much allocation do you even have to it? Is that really going to be the thing that puts you over the top? So again, if your goal is to diversify your holdings to preserve wealth and not necessarily build it, then that might be okay. But I think that we tend to confuse these concepts at times, at least I know I do, because how much are you really going to be able to know about your 30th stock anyway, compared to how much do you think you should know? And now let's take a listen to Peter Lynch to hammer this point home.
The single most important thing to me in the stock market for anyone is to know what you own. I'm amazed how many people own stocks. They would not be able to tell you why they own it. They couldn't say in a minute or less why they own it. Actually, if you really press them down, they'd say the reason I own this is the sucker's going up. I mean, that's the only reason. That's the only reason they own it. And if you can't explain, I'm serious, you can't explain to a 10-year-old in 2 minutes or less why you own a stock, you shouldn't own it. And that's true, I think, about 80% of people that own stocks.
And this is a point that I've learned over time, to where I would buy a stock, just have a general understanding of their business, and outside of that, I was just hoping. So when news would come out or the price would go down, I would panic and not really have the confidence of knowing why I bought it in the first place. I hadn't done my due diligence up front, so whenever it started going down, I would just assume that people knew more than I did because I didn't really know much. Which brings us to the second question we need to ask ourselves to figure out how many stocks we should buy. How many stocks can you reasonably understand and keep up with? It's easy for us to get consumed with checking our portfolios and clicking every notification or news alert that we get. And usually those things end up being bad for our total returns because we feel like we need to act and do something when sometimes all we need to do is nothing. And that's why having a clear understanding of what you bought, why you bought it, and what story you bought into is critical for being able to pick individual stocks. Now here's Peter Lynch one last time to touch on that.
So I don't believe in diversification at all. I would own one stock. But what I do believe in is if I find 10 good stories, they're all equally attractive, I buy all 10. And I wait to see them unfold. It's like watching 10 poker games. 10 games of stud poker. You watch the cards turn over, story 3 gets better, story 6 slips, story 7 stays the same but it goes up 50%, so you sell 7 and buy 2. That's all I do. So if they're equally attractive, I buy all 10. Then gradually some story says, oh my God, this is getting better and better, and guess what? The stock just went down. So you keep watching 10 stories, and magically, because of that rule of stocks going up and down a lot, then you load up. You really, take a big advantage. So that either happens because something happens to the company, or the market goes down and all stocks go down.
Man, I just love Peter Lynch. Like, the way that he talks about stocks is so relatable and so easy to understand. I have just learned a ton from him over the years, and that's not a stretch at all. But the way that I understand the stocks that I buy today is way different than it was before. So just off the top of my head, why did I buy Walmart? I bought Walmart because they have a wide moat and they're growing revenues slightly higher than their 5-year averages. But they have an emphasis on growing net income and free cash flow higher than revenues, which I think is going to lead to higher dividend payouts and dividend growth. That's basically my investment thesis for Walmart, just in 10 seconds. Or if we take it a step further and say, why did I invest in Visa? They have a 97% profit margin. They have a free cash flow margin that's over 51%. They really only have one competitor out there in the market. They have inflation-resistant revenues, and they don't take any credit risk for the actual cards that are processed on their network. So those things are all things that, off the top of my head, I know about the business because I've done the work to really understand it. Anytime I have a new news story or earnings come out, I know exactly what I'm looking for to be able to check if the story that I bought into is still intact. And if it is, then I'm good. I don't need to overreact, and I don't really need to even worry about it. It's that depth of knowledge in that specific company, though, that gives me that confidence. So to figure out how many stocks I should buy in my portfolio, the answer is simply how many stocks can I understand at that level? Is it 10? Is it 15? Is it even less than that? Maybe 6 or 7? Ultimately, that's a question that we all have to answer for ourselves. And so if we go back over the framework that we built on how to decide how many stocks you should buy, to me, is simply 2 questions. 1, should you own any individual stocks at all? If you don't want to or aren't prepared to analyze and monitor them, then just own the market, whether that's indexes or actively managed funds that are done for you. And then 2, if you do want to own individual stocks, how many stocks can you reasonably understand and keep up with? And limit yourself to the number of stocks you can get the right amount of depth on. And if you want more exposure to other things, consider using indexes or ETFs to handle the rest. And SCHD does that in my portfolio. They have a great history of dividend growth, which aligns with my portfolio goals, and I don't really think about it that much. I just let it do its thing, and I concentrate my time on the individual stocks that I do hold. So for me, the answer is probably 10 to 15 individual stocks, as well as the indexes that I use to complement them, which is obviously the S&P 500 and SCHD. So what about you guys? How many stocks do you have in your portfolio? Is it too many? Let me know down in the comments below. Hope you guys have a great day out there. Financial independence is true freedom, so keep building and stacking wins, and I'll see you guys in the next one. Peace.